Today I want to talk about the top 3 online savings accounts that offer the highest rates and how quickly they updated the rates after the Fed rate increase on Wednesday. It's now Friday. So the first one is Wealthfront, and they've always been the winner with this contest. So it was 4.05% on Wednesday. They announced the same day on Wednesday that they were increasing the rate to 4.3%, which it is today, and that would be effective on Friday. So this morning I woke up and around 10:30 it was updated to 4.3. When you log into the account, it shows 4.3. And I have a 0.5% rate boost for 3 months if you sign up with my link that changes this from 4.3 to 4.8. You just add the 0.5% on whatever the rate is at Wealthfront, and you'll get that for 3 months. This is another thing I noticed today. I don't know if Wealthfront has offered this in the past, but they're now offering up to $3 million FDIC insurance on the cash accounts. And that's $6 million for joint accounts. Now they do that by opening multiple bank accounts with their partners. So I believe that's even higher than Fidelity. I think Fidelity is $2 million. So that's a nice deal. The next one is UFB Direct. Before the rate increase, UFB Direct was 5.02 and is still 5.02 today. So I don't think that they're probably going to increase it much above that because they're probably losing money. Now, this sounds really good, right? 5.02, but there is a downside. The downside is the rate is not auto updated. So when I signed up with UFB Direct, it was 4.4, I think. And I logged into my account the other day and it was still 4.04, 4.4. And so I sent a message to customer service, an email message, and it was like 10 days and I never heard back. So I called in and they are able to increase this. So unlike Capital One 360 savings where they force you to close the account, UFB Direct will actually increase it for you, but you do have to call and talk to customer service, and then it takes 24 to 48 hours. So I did it yesterday. I logged in today. Now it says 5.02. So that's an annoyance. The second annoyance is there's a 6-item withdrawal limit, whether that's bill pay or that's what's in writing. So I don't know if maybe they're not enforcing that, but it's in writing, so it's possibly enforceable. Now, SaveBetter, they were really quick. On Wednesday, or by Thursday, I saw 4.75%. Western Alliance had increased their rate to 4.75% on Thursday. That's even before Wealthfront. Now, it's still not as high as the 4.8% that you get with Wealthfront with my cash boost, but it's one that you don't have to have any referral for. That's what I like about this. Today on Friday, actually since yesterday, Western Alliance Bank has been offering 4.75% APY. Now, they're going through some struggles right now. They have a lot of business customers. I think over 60% of their deposits are people with over 250,000. And that was a good thing in the past because it was they have a greater efficiency ratio. They spend less money on customer service. But now with everything that's going on, that's a liability. And so I've seen Western Alliance really pushing their high rates to get deposit money. And so I think they're kind of going through that, but you don't really have to worry. It's FDIC insured. So this is updated. When I actually log into my account, I see it's updated right away, which is nice. Now there is a downside to SaveBetter. There's no bill pay. And I sort of learned about this after I created an account. So when I go to account overview and I log in, you'll see my Western Alliance Bank. Now when I signed up, I think this is around 4.5 or something, and it updates right away, which is nice. But if you go to look at the details, when I go to look at the details, you won't see anything about your account number. If you want to do any sort of bill pay, you have no account number, no routing number, so you can't move money to pay a bill. The only way you can move money out is you click on this deposit withdrawal thing. You can link to an external account and send the money out. That's it. So that's kind of a deal breaker for me. So I look at SaveBetter sort of like a CD where you put the money and you keep it there for a long time. What's the other downside of SaveBetter? It's a brokerage, so in the event that they fail, there may be some delays because you're going through basically 3 companies. You're going through SaveBetter, you're going through a custodian bank, and you're going to the and that's going to the last bank. And Wealthfront is sort of the same way. So you're going through Wealthfront, you're going through a custodian bank, and then that's going to the third-party bank. So I would think that would delay things. The great thing about SaveBetter is there's no 6-item limit. There's no 6-item withdrawal limit per month, and that's in writing. So you could withdraw the money as many times as you want, but with this one, it doesn't really matter because you can't do bill pay, so it doesn't really matter anyways. I did have a question. I don't know if I touched on this in the past when I did the SaveBetter video. So I know some people, with all the bank failures, some people are worried about what's going to happen with their money if they fail, if the bank fails. I contacted SaveBetter and I asked them, what would happen if Western Alliance Bank or any of the banks they have failed? What would happen with the money? What's the process? So it says, since your funds are held by our custodian, this is from customer service. Since your funds are held by our custodian bank, Lewis and Clark Bank, the custodian bank would be in communication with FDIC and provide records of balances held within the specific bank. Each SaveBetter account has a unique ID number, and it is what we use to identify the owner's accounts and balances. FDIC would then send the funds to Lewis and Clark, and the custodian bank would return them to each customer. Okay, so that's for that. And then I had another question. Okay, so what happens if SaveBetter fails? If SaveBetter fails, the custodian bank, which holds all of the funds at the different bank partners, would return all funds to the appropriate customers. So it's not like if SaveBetter fails, the custodian bank would not know. I'm sure there's a way that they would know. If SaveBetter failed, I'm sure there's some type of business relationship where there's some type of payments. They would know. They would return the money to the appropriate customers. So I'm not that concerned about it. And at this point in time, with everybody searching for higher rates, I don't think that SaveBetter is struggling at this point in time. They're making commissions. They don't have any liability. They're not holding the assets. They're a commission-based organization, and when the demand goes up, the commissions go up. So they're probably doing fairly well now. So I also looked on the SaveBetter website to see if their high-yield CDs or no penalty CDs would offer higher rates or a competitive rate. It's still, I would say definitely the high-yield CDs are not offering the best rates right now. As you can see, 27-month for 5.15 is just too long. There's too much uncertainty. The 12-month at 5.01, that's not a good deal either, because you can already get almost 5% with the Western Alliance Bank, or you can get 4.8 with Wealthfront, or you can get 5.04 with UFB, and you could take the money out at any time. You don't have to worry about a 12-month hold period. Now, the no penalty CD isn't any better than the savings account. The Sallie Mae Bank offering 4.75%. You can get that right now with their savings account with Western Alliance Bank. So I would definitely go with the savings over this. And actually, I would say go with UFB Bank or Wealthfront over this, because right now, I think as far as being the most competitive, I would say UFB Bank and Wealthfront are the top right now, because without having bill pay on SaveBetter is sort of a deal breaker for me. I'll put a link in the description for the Wealthfront 0.5% cash boost. You'll get a cash boost for 3 months of 0.5%. So instead of being 4.3%, which it currently is, it'll be 4.8% for 3 months, and then you can refer others. If you really want to help out the channel, please subscribe. And also, I'm going to put a link in the description for some credit card referrals. If you don't already have some of these cards, I think they're definitely worthwhile. There's no annual fee on these 3 cards. Discover IT gives you, it's probably important that you sign up now before the deals are gone, because as the banks get stricter, the deals are starting to slowly disappear. This Discover IT card before was offering $100 sign up bonus. Now it's only $50. But in my opinion, it's still a good deal because there's no annual fee. You get 5%, really nice 5% categories, and they double it the first year. So the first year categories, if you got, like this month, it's for groceries. You go to the grocery store and you get, you spend $1,000 a month, let's say. You get 5% back on that. And then at the end of the year, they double it. So you're basically getting 10% off your groceries or whatever the category is. look at the link and sign up if you want. So definitely worth signing up. If you pay off your balance every month, you're not going to have any interest charges. All right, the next one is Capital One. I have Quicksilver. I'm not the biggest fan of Quicksilver. I got approved for both Quicksilver and Saver, Capital One Saver. They're both definitely worth doing because you get $200 back and you only have to spend $500. You only have to spend $500. So that's a 40% return and there's no annual fee. I mean, really, where can you get that? If you sign up with both of these cards, you probably have to do it over a few months. You're going to get $400. You could probably I can easily spend $500 in a month. You could actually pay some utility bills with your credit card. There may be a small fee, but the amount of money that you're getting back, if you're pushing yourself over the spending limit, just pay 3 months worth of your utility bills. And this is definitely worth it. But a 40% return, I mean, you got to jump on that. It's not going to last forever. All right, the next one, Saver. This is the one I would prefer. If you were going to sign up with either one of these, Quicksilver or Saver One, I would say do the Saver One first because you only have to spend $500 and you get $200, the same as Quicksilver, but you've got a 3% cashback category on dining, entertainment, and streaming categories and at grocery stores versus 1.5% for everything with Quicksilver. But in either case, I would do both of them because they're both worthwhile for the $200. Definitely jump on this offer before it ends.